Hey, welcome back everybody. So today I'm going to be talking about 3 more LEAPS that I've been buying in November, and I think right now is still a really good time to buy. I'm going to be going through some of the fundamentals and just talking about why I'm buying these LEAP options. Okay, if you're new to the channel, make sure you smash that like button if I do provide any kind of value. If you make some money, comment below. I'd love to hear from you, and just make sure you subscribe for more content like this. Okay, so if you don't know this channel, I mostly talk about leaps, just because I'm in love with leap options because it gives you a lot more upside with a lot less capital. Okay, so meaning that like a lot of these companies that I am buying leaps on are essentially just companies I'm bullish on, and rather than buying 100 shares outright, I'm really just betting on the fact that they're going to be up in over a year. Okay, so it reduces my capital by about half, so it takes about half the cost to buy a leap option than if you were to just buy 100 shares. And to me, I like the fact that I don't have to necessarily worry about any kind of like movement down or larger movements, because I have a lot more time for the time decay to be in my advantage. Okay, so that's why I like leap options, and that's why the channel is talking mostly about leap options. Okay, so the stock tickers that I'm buying leap options in November, the first one is HPQ. Okay, so you've probably heard of HP if you have a printer. If you still have a printer, then very likely it might be from HP. Okay, so HP does produce a lot of personal computing, access devices, imaging, printing products, and other related technologies, solutions, and services. Okay, so the reason why I'm buying HP is because a couple of things. Let's take a look at finviz.com. Finviz right now, the PE ratio is sitting at a really low 9.85 PE ratio, okay, with a 4 PE of 7.90. Okay, now the market cap is $35 billion. The income for this year is $4 billion. That is amazing for such a large company. If you look at the RSI, which is the relative strength index, is sitting at a 65.99, which is still pretty modest. And so I think it's still a great time to buy in. Let's take a look at Yahoo Finance. I like taking a look at some of the fundamentals on their balance sheet. And so right now they have plenty of cash, of course, because they're such a big company. But look at their EBITDA, okay, EBITDA. Okay, that basically just tells you how profitable the company is. And this year, HPQ is just raking in cash. Okay, so I don't know why. Perhaps a lot of people more are stuck inside and they're really needing printers. But HPQ is just killing it, and they're still sitting at a pretty low P ratio. Okay, so I want to show you what a leap option will look like, and very similar to what I opened recently. Okay, so you would go into Robinhood or whatever brokerage you are trading on, and I highly recommend Robinhood to if you're a beginner. But if you understand, if you're able to use margin, and if you understand margin, I think Interactive Brokers is great. But anyways, so I would be setting my expiration date at least a year or more out. So in this case, I'm probably going to be doing, or I did do January 2023. So you'd be buying a call option. So again, the call option gives you the right, but not the obligation to buy 100 shares of a certain stock. And I will go deep in the money, so below the share price. And I'm looking at probably, just $25. So the share price of HPQ would only have to go up about 3.8%. For me to start realizing a profit. And again, I talk about this in a lot of my videos. You don't have to wait until January 2023 to sell your leap option. You can sell it really anytime before then, just whenever you realize a profit. I like to sell my leap options around 30, 40, 50%. I probably should be more patient and wait until it goes up a little more, but generally I like to take profits early. So I've sold leap options, 2 weeks, 3 weeks, even a week out after I bought them, just as soon as it pops up. And if I feel like it's a good time to sell, I would just go ahead and sell it. But in this case, so right now, if I open up a leap option of $25, expiring January 2023. I would only be paying $7.80 per share, so that would be $780 per contract. And to me, that's not too bad for 100 shares in HP, right? If I were to buy 100 shares of HP right now, it would be $3,160 because so rather than buying 100 shares, I'm paying a fraction of that, and the stock really doesn't have to move up that much for me to make a profit. Now, of course, if the stock goes down after a year, then I would lose the entire contract. But usually I would look at stocks, like I just said, with good fundamentals, a pretty big market cap, and just stocks that I don't believe is going to be down in a year or so. Okay, so that's the first stock ticker. And just real quick, EBITDA, for those of you guys who don't know, I pulled this up, is an acronym for earnings of the company before interest, tax, and amortization expenses are deducted. So basically, again, it just means profit, how profitable a company is. Okay, so the second stock ticker that I'm buying LEAP options on is stock ticker LPG. Okay. Oh, sorry, LYG. Okay, Lloyds Banking Group. Okay, so Lloyds Banking Group is sitting at $2.60 per share. Let's take a look at the FinViz real quick. Okay, it has a low P ratio of 7.29, 4 P ratio of 4.53. It does have a pretty high insider ownership, so that's something that to take notice on. But the P ratio is pretty low. The RSI is at 46.61, which is pretty good. If you take a look at the Yahoo Finance, and take a look at the financials. Okay, revenue this year is just quite a bit at $41 billion. Their net income is really high compared to the previous year. So I do think they're making quite a bit of money. This, along with Barclays, has been two banks that I've been looking at. And Lloyds is really a financial company based in the UK, London. So this is another, I think, company that is going to go up eventually. And so taking a look at some of the call options or LEAP options, there's not really a LEAP option for this one. Okay, so my bad. But I would do it for Barclays. So Barclays is in a very similar industry. But sometimes I still open up these options because it's far enough to where I think it can be up in what, 5 months. Okay, so right now there are options at really just a measly $63, so 63 cents per share. If I'd open up this contract at $2, I'm only paying $63 to open up this contract. And the stock only has to go up 0.15% for you to start realizing profit. I think this is a relatively safe bet, in my opinion, but do your own research. This is not any kind of financial advice. But simply stocks that I'm buying LEAP options, or I guess this is not really a LEAP option. This is more of just a call option. Okay, so an actual stock now that I'm looking at, or that I've bought LEAP options in November, is Alliance Resource Partners. Okay, so Alliance Resource Partners is a natural resource company. It specializes in coal. So the reason why I've been buying coal is it's not typically the energy that most people would like, but I do think coal is going to be very essential in the upcoming few months, just because I think a hard winter is coming, and I think a lot of countries have an energy crisis. So I think coal is still something that people are gonna need, unfortunately. I'm not really a big fan of coal myself. I do value, like green movements, ESG, but unfortunately, I think, right now we're just in a crisis for energy. So I do think, Alliance Resource Partners are in a position where they can do fairly well. Let's take a look at some of the fundamentals. ARLP. So ARLP is sitting at a really low 4P ratio of 4.51. P ratio right now is at 5.92. They have a market cap of $1.43 billion. So it's relatively small, but I think it's big enough to where I think there can be there is a lot of volume in it. Okay, so taking a look at their finances. Okay, so, oops. Okay, so the revenue has been up since last year. Their EBITDA is actually, is it EBITDA? EBITDA is pretty healthy. They're making pretty good profits. So I do think that this company is going to do well in the long term. They are down from the previous years, but I think they're going to pop back up just because they look pretty healthy. Their balance sheet looks pretty healthy. So taking a look at the call options for our ARLP, we will set our expiration date to December 16th, 2022. We can look at, so over here, I already see some pretty good options. You can buy the $5 option at $6.75 a share, so $675 for the contract. And really, ARLP would only have to move up about 4% for you to realize profit. So I think to me that would be something that I would open. I forgot which one that I opened yesterday, but this would be the one I would open. Okay, so these are just three companies that I am buying long term. I do think they have a lot of potential to make pretty good money, and also to me it's a relatively safe bet just because I'm buying LEAP options. But let me know what LEAP options you're buying in November. I'd love to hear from you. Comment below. And again, smash that like button if you do like this content. If there's any questions that you might have, leave a comment below. Until next time, guys, I'll see you then.